market was. That's the next page there. Look at this, my email on January 2nd to everybody. And I said, all right, look, one of my students was sitting in first class, and guess who was sitting next to him? Booyah! Jim Kramer. And Matthews got him on the cell phone. He says, I'm sitting right next to Jim Kramer. Jim Kramer makes millions of dollars. And he said, talk to him, Roy. So we're both talking to him. And he says, he was talking to him, and he says, and Jim Kramer told us both, he said, hey boys, I think the market's made a bottom, and we're getting ready to go up right now. Well, the markets were still at 9,000, over 9,000. I've been predicting for 2 years we'd go down to, and I've even said it, Jim Kramer makes a lot of money and he's popular, and maybe the markets haven't made a bottom, but I still don't think so. I still think we've got further to go. I've been saying since August 2008 that the bottom's going to be somewhere between 5,000 and 6,000. The Dow's over 9,000 right now. Guess what? By March the 5th, it was down to 6,400. I was 400 points away from my prediction. Okay? How can you predict the markets? Because if you know how to read a chart, you can predict not only price direction, but about how much as well.
History repeats itself.
Because history is always repeating itself. By the way, you know, well, and you're going to see how I'm able to predict where this market's going to go in the next few years as well. And you'll be able to predict it as well. Okay? You already know where the market's headed, folks. You know, and so it's easy to predict, but now you learn how much. How much, where should our profit targets be, or just let your stop losses get you out. Either way. But again, you're learning how to do things and how to actually predict direction to a high degree of accuracy, right? I'd like to show you selling short, because I forgot to do that earlier, so let's go over selling short real quickly. So Mary, we said a while ago I'm going to use Merrill Lynch. So let's suppose, Mary, we're looking at the Merrill Lynch chart that you have there. You've got a copy of it right there. I think you do. I think it's the third page of the book. And let's suppose that Merrill Lynch was in that channel and it broke right here, $70 a share. There's 80 up here, all right? So Mary, I would call you, here's how we're going to make money on the downside. It broke below the channel. I would call you, Mary, and say, Mary, I now want you to sell short, all right, 1,000 shares of Merrill, sorry, MER. Sell short 1,000 shares of Merrill at $70 per share, okay? So you know what they would do? And by the way, the reason they call it selling short is because you don't own it. It's not yours. You're borrowing it to sell it, okay? That's why they call it short. You're selling short because you're short the stock. You don't have it. It's not yours. So they're actually technically letting you borrow the stock. So when you sell short 1,000 shares, Mary, they will deposit into your account immediately $70,000 go into your account immediately. Now, it shows up in your statement that you sold short 1,000 shares of Merrill Lynch, but you can't touch it. It's not yours. Because you sold something you don't own. So what the computer's looking for is for a buyback. If you sold first, then it's looking for a buy to cancel out the trade. So now, you are obligated by law. Anytime you sell short, you're obligated by law to buy it back in the future. And the future can be 1 minute, 1 hour, 1 day, 1 week, 1 year. Doesn't matter. Unless there's an expiration that's attached to it. So, Mary, you're sitting $70,000 in your account. You're feeling really good about it, but you know what? There's got to be a buy somewhere, all right? Well, fortunately, you were able to read the charts, and when it broke below the channel, you sold short at 70. Let's say we're not smart enough to weight it all the way down to 0. It did go to 0, okay? So let's suppose that it got down to 20, and I tell you, buy back. Buy back your 1,000 shares, Mary. Buy back your 1,000 shares at $20 a share. Now you sold them at 70, so there's 70 in your account. What is the cost to buy back your shares? $20,000 it cost you to buy back your shares. How much is sitting in your account? Well, you had 70, so what's your profit? And they will send you a check for this. All right? So by betting on something coming down, you just made $50,000. By betting it would come down.
And you would have put a stop loss at 80, right?
And well, Yeah, at 80 would have been your stop loss, and that's because if it ever goes up to 80, by the way, how high can this go? How high can it go?
Before what?
Well, how high can a stock go?
As high as it can go.
It's unlimited. That's why the brokerage houses do not want you to sell short. You know what they know? Nobody uses stop losses, okay? And they know if you sell short a stock, what's your risk? Since nobody trades with a stop loss, what's the risk? It's unlimited.
Unlimited, yeah.
It's unlimited risk because nobody trades with a stop loss. But because you met Roy Flores, you know, all right, that if this goes against me, I'm going to buy back at 80, and that's my stop loss. And I will not let it go any further than that, so I'm going to buy it back at 80. I sold it at 70, so you had 70,000 in your account when you sold short. Now you have to buy back at 80. It cost you 80,000 to buy back. What was your loss? $10,000 loss when it went up. So it went up and you lost money. Okay? Because you sold short first. You were playing the downside. Okay? So this is how you make a fortune on the downside. Now, in today's environment, folks, it's all computerized, so they don't even ask you to sell short. If the computer sees a sell, what's it looking for in the future?
Buy.
A buy, just so it zeroes out. So you don't even have to call a broker or put in your, your computer, I'm selling short. You just say sell, that's it. All right, and then it wants to see a buy later on. So in today's environment, because it's all computerized, I mean, nobody even says, I'm selling short. It's just, you're selling first and buying back second, instead of buying first and selling second. Okay. So it's the same game, but again, very few people understand this concept. Now there's other nuances to this. There's margin interest you got to pay. There's other things. I just want you to understand the concept today. How do I make money when something goes from 70 down to 20? Or, like I was showing you, when Smith International goes from 74 to 18, how do I make money on that? So you're selling short. And so in this market crash, guess what you better start doing? Selling short. You better have some of that going on as well.
Are all stocks available to sell short?
No,
or
not all
certain
stocks are. There's a list, and your brokerage house will give you the stocks that are available to sell short. Most of them are, but not all of them. Most of them are. By the way, somebody says, is it illegal? Is it ethical? Folks, it's to provide an orderly market. It's been done for 200 years, so I suspect the government keeps saying we're going to stop selling short, but we're going to stop that short selling, but you can't, because that's what provides an orderly market. They've tried doing it in the past, it doesn't work. So you got to have short sellers out there as well, not just buyers, but short sellers. You got to have them both.
What about the countries, though, that are banning that now?
Ours did that for a while too, but they'll only do it for a short period of time, and then they've got to go back to reality. And the reality is people are going to sell short. That's going to happen. All right. So, again, though, what's the point of this exercise is that there's rhymes or reason for doing things. There was a rhyme or reason for getting in because it broke above the channel, and there was a rhyme for selling short, a rhyme or reason because it broke below the channel, and now we're short on the downside. So either way, we're going to make money on these trades, okay? And that's what we're looking at. Again, we know we're going to be wrong on several of them, so we got to take our stop losses in and say, I know I'm going to lose on a few of them. But nobody likes taking a loss. And nobody likes to be a loser. And so that nobody ever takes those small losses. So when you walk out the door today, you're going to have a stop loss every single time. You already know that. I got to play with a stop loss every single time. People always get killed when they have no stop loss. Yeah.
How do you know when a good point would be to buy that back? You can
Well,
give me an example.
it went all the way to zero, so you could look at a chart and kind of get to where the support and resistance lines are, or just have a trailing stop that's moving down with it. So your buy stop now, as it goes down to 30, 20, 15, your buy stop keeps going with it, and then if it ever ratchets up, it gets you out. In this case, it never got you out. You went from 70 to 0. So that was a real good trade at that point. Really good trade. You made all the money. So you made all $70,000 on that trade, okay? You did 1,000 shares. So again, you don't want to be afraid to sell short. And by the way, they don't even teach brokers how to do this anymore because the brokerage house doesn't want people selling short because they know nobody plays with a stop loss, and so therefore the risk is unlimited. That's why they don't even teach people to do it anymore, because the risk is unlimited, because nobody puts a buy stop to stop it out. Nobody trades, the herd does not trade with a stop loss. You do not want to be part of the herd, because the herd always gets led to slaughter, okay? So that's a point you want to pick up. All right, you've been sitting for another hour. Well, hold on, yeah.
If you sell short, you see, you get a deposit, I guess that, like, your credit score or something like that doesn't come, it's not a factor, it's not like getting a loan or something?
No, you will have to put up half of the money.
Okay.
So you're gonna have to put up 35,000 to do that trade, okay?
You have to set up a
So,
margin.
yeah, and you gotta have a margin account, as I said, and there's margin interest, there's a variety of nuances. The only thing I want you to know is, there is a way to make money when something is coming down. That's all I want you to get out of today. How do I make money when the markets are crashing? Any market, doesn't matter. And the only way that you're gonna determine it's crashing, because the charts are telling you that's the direction it's going. That's how I've been able to predict the future.